And I suppose, drawing on that word boring, you just used, Aubrey, but I have a question. It's when you look back at your most successful investments, how often did they feel boring at the time, and what characteristics did they tend to share?
Oh, it's a very deep question. I think we can spend all day discussing it.
Well, I don't find them boring. They're not boring to us.
Yeah.
We
The man-
find ovens and nurseries exciting.
Mantra is boring is beautiful.
Well, I think we do say boring beautiful. There's a bit of tongue in cheek when we use it. But I guess it's boring in the sense that it's not something that if you're in a gathering of professionals or the classic cocktail party situations, whatever, it's businesses that people are not likely to be talking about in a social gathering. People will be in a social gathering and they'll be happily talking about NVIDIA, this or whatever tech company that they own at any moment in time, or a new technology or new biotech. People are very unlikely to be talking about equipment rental for roadworks or construction businesses or anything of the sort. They're equally unlikely to be talking about I don't know, what's another boring business that people are not going to be talking about? What were you thinking?
Well, Bright Horizons, nurseries, Croda, specialty chemicals.
Yeah.
But not just that. What is boring now is not necessarily boring 10 years ago, and what is boring 10 years ago is not necessarily boring now. I mean, 10, 15 years ago, people probably wouldn't be talking about Microsoft as an exciting stock. In fact, it was trading at 6 times earnings. People thought it boring. Oh God, Windows and Microsoft Word. No one saw the sort of nascent cloud business and everything else that they were doing, and how brilliant a business it was then. So things change as well.
I think the other thing is people underappreciate if you have a business that is growing its top line by, I don't know, 8 to 10%. Nothing extraordinarily high that people think it's the next new thing. But it's been doing it for decades and decades. And they gain a bit of scale and margin improvement over time, that translates into double-digit performance at the net income line. And then you get dividends or buybacks on top of that. You can generate mid to high teen returns from what looks like fairly mundane levels of growth. And even that 8 to 10% revenue growth rate could be, 3% volume growth, 3% price increases, and two or 3 percentage points of new customers. So they don't look like big numbers, but over long periods of time, if you continue to execute time and time again in these boring businesses, that translates into pretty extraordinary results over decades. And we just have a preference for these types of situations over something that is going to make, 25% growth a year over a 10-year period, but then by the end of it, it gets disrupted because something else new comes into play, and there's nothing resilient about it. This is why the average age of companies in our portfolio is something close to 80 years. There's something to this longevity that I think that makes it more likely to continue than the other way around.
Well, absolutely. It's sort of like actuarial science. If you live to your probability of living from 60 to 70 is the same as your probability of living from 70 to 80. The older you are, the better your chances are almost. But I think 2 companies that sort of really exemplify this would be Middleby and NVR. Neither company has done better than low double-digit growth, low teens, sometimes high single digits, or often high single digits. Again, a little bit of margin improvement. Never traded at neither of them have traded at crazy multiples. But Middleby is 100 bagger. If you'd owned it for 25 years, you'd have made 100 times your money. NVR, I think you'd have made about 1,000 times your money. Yeah, the numbers are extraordinary. What a brilliant business can deliver over 2-3 decades is just absolutely extraordinary.
And Aubrey, I remember when you joined, we've talked about LabCorp over the years, which is a stock that I've owned for, gosh, 23 years, I think now, or 24 years. And for most of that time, I don't think they've had many years where they've grown at 10% or more. I think they've tended to grow at mid-single digits to high single digits in terms of top line. And that's basically, again, low single digit volume growth, low single digit pricing, a bit of acquisitions, a good history of buyback. The stock never traded at silly multiples, so the buybacks actually go quite a bit. And for most of that time, it's basically done as well or better than the S&P 500 for all the excitement that's in the S&P 500 and all this tech this and tech that. This company that does pretty mundane, I mean, they don't think it's mundane, but basically medical testing, so where you take your blood tests. It's that type of boring is just extraordinary if it works and they execute over long periods of time. And it's that consistency of it and the risk aspect that Aubrey talked about earlier, that you can do these because you're not taking silly risks with these boring companies. If you just own a basket of them, you do very well over long periods of time. Not in any one year or any 2 or 3 years, but over long periods of time, you do very well.